Hello, I'm Ramani Ayer, CEO of the Hartford, and I appreciate you sharing a few minutes with me on a critically important topic, a proposal for a coastal catastrophe partnership. This year's financial crisis stems from failure to properly account for risk and to charge for it. While government and industry wrestle with this crisis, consumers, insurers, and policyholders must partner again to prevent a different catastrophe built on mispriced risk. Failure may ultimately put the burden on the taxpayer's shoulder. People take on risks every day. Simply leaving the driveway in a car is a risk. Building an investment portfolio is another. Living in the path of natural catastrophes like hurricanes is a third. And most risks can be insured, but guarding against the biggest hurricanes requires a new kind of public-private partnership. I've worked for over 30 years in a business that calculates the risks people take to help protect them and their families. When they turn a blind eye to risk, as many did leading to the embrace of subprime mortgages, even those far removed from disaster face the fallout. As taxpayers, we'll be living with that fallout for years. And today, we're turning the same blind eye to risky weather. Now, it doesn't take an expert, an eye on history and the future maybe, to see the financial train wreck ahead if we don't change how we prepare for and recover from hurricanes. Now, the Hartford's plan, the Coastal Catastrophe Partnership, calls for frank talk and collective effort to develop a long-term solution. While debates brew over the cause, data show hurricanes are intensifying. Our overbuilt coastlines offer an expansive and expensive bullseye for these hurricanes. New York and Florida, for example, each have an estimated $2 trillion of insured value in coastal areas. In 1926, Miami was hit by the big blow that killed hundreds and left thousands homeless. And that's before 8 decades of migration and development. The population of Dade and Broward counties was 135,000 back then. Today, it tops 4 million. If a similar blow followed the same path of 1926, and it can, it could dwarf Katrina's damage. The price tag for insured losses could eclipse $100 billion, plus the gut punch to our economy from losses that weren't insured. Unmindful of history and betting on luck for the future, policies at the local, state, and federal levels have resulted in still more migration to high-risk areas. Census records show nearly 1 of every 2 Americans now live within 50 miles of our shores. As many of them are painfully aware, insurance costs in hurricane-prone areas have risen to try to reflect this dramatically increasing exposure. Hoping to aid homeowners, some states pursued policies that perpetuate risky behavior and undermine the stability of the private insurance market. But hope, buttressed by artificially suppressed rates, is not really a plan. The result is that taxpayers are increasingly on the hook for recovery. And this trend continues amid over-politicized debates about who's to blame for rising insurance rates. Lost in the finger-pointing is an honest assessment of how all parties, state and federal government, insurers and homeowners, share accountability and still less frank talk about moving from the blame game to long-term solutions. We want to see risk put back on private insurers like the Hartford and its customers exposed to hurricanes, and away from taxpayers who live out of harm's way. To do this, a partnership must above all else do 5 things in harmony. First, require states to enforce tough building codes and land use planning. Second, reward homeowners who preventively mitigate their risk. Third, allow private insurers to reflect the true risk of insurance in their rates. Fourth, provide federal reinsurance for extreme 1-in-100-year storms. Lastly, offer assistance to low-income coastal homeowners who cannot afford corresponding rate increases. The Hartford is one company making hard decisions about risks we'll take on near the coast. We want to do business there, and a catastrophe partnership would let us expand our presence in coastal states, insure their citizens' homes, and remain solvent even after pounding from storms of historic magnitude. The clock is ticking on the next big blow. After careers spent managing risk, I'm certain we'll pay the price if we don't act now. But the fix will be found only when we move past short-term interest and invest in a permanent solution. I'm Ramani Ayer. Thanks very much for sharing a few minutes of your time.